All right, guys. So to keep this video very brief, right? I'm going to strictly talk about a scalping and day trading strategy that I've been using for multiple years now. And you guys seen it day after day when I do scalp in the morning, and that's the only time I'll take a trade when there's the most, when it's most volatile, right? um and with this potential strategy, there's actual criterias where you need to be able to understand that some days you're not going to take on a trade, where there are also some days where if there is a continuation pattern or going into a long run, there are days where you should actually hold your position a little longer. Okay. Obviously today was a bad day or is a bad day to kind of have an example of. Most of the tickers, if not all of the broader market, has pretty much just chopped within range, if not the early morning breakout of a fake out. Again, if you guys are new here, this is pretty much my day trading setup of what I have on a smaller time frame chart. I do have multiple monitors, but this is the main bulk of what I look at when I'm actually taking on a trade. Again, my left side on this side here, guys, is my 1 day, 1 minute chart. And on the right, I usually keep it at the 15-minute or the 5 minute chart. Again, what does that mean? It means that each of these candles, right, at the open and close is equal to 15 minutes, and vice versa on this on the left side. Each of these candles are 1 minute. I usually do this by looking at just the overall spectrum of what the trend is for the day. Obviously, if you're not looking at it from a larger time, um, you know, perspective, you won't really have the actual overall trend, which obviously, again, I'm not going to discuss that in this video. I discussed it many times in previous webinars about top-down analysis, doing your due diligence from a larger time frame standpoint, obviously from the weekly, from the yearly, and then working your way down to obviously, the 4 hour, the 1 hour, the 30 minutes, whichever works for you until you get to your 1 day, 1 minutes and, your 5 day or your 15 minutes. Going strictly into the criteria portion of what I do look for in day trading or scalping methods. Obviously, like I said and mentioned before, it's very hard for me to alert these, right? So I do want you guys to kind of utilize this strategy on your own and trade on your own very confidently. This is things where you won't ever find on YouTube and stuff. I've been fine tuning this. I've been tweaking this for, I don't know, 3-4 years now. And finally, I figured out this is the only method I can trade the first 1 hour of the market in. And this is pretty much, I'll be done for the day after that. Okay. And this is something, again, we utilize in our Discord within the tools, within the option flow to give us, again, a stronger conviction when we take these potential trades, right? So first and foremost, the first criteria of any time I've ever want to look into a trade. And again, I'm going to walk you guys with multiple, I guess you could say, methods on how different traders react and different traders like to trade this. For me, like everybody knows, I am a breakout trader. I like to trade the continuations. I like to have that as a better risk to reward when I do take on these trades. Why? Because the reward potential is a lot greater. Rather than taking on range traders where they like to buy the pre-market lows and then they'll sell at the pre-market highs, or some sorts of when they see some rejection at early morning and then they like to take the scalp to the downside. Again, there's multiple ways you can make money in this market, and trade and scalp and day trade, whatever it is. However, my potential strategy and how I like to work on day trades and scalps, which kind of keeps me sane, to be honest, is that first and foremost, I want to see SPY, right, which I'm on SPY right now. Obviously, a lot of you guys know, but SPY is the S&P 500. It tracks pretty much the whole broader market of what the top 500 companies are moving at. So I do like, and I do want to see what happened today, right? In the morning, we actually had, again, the break of the pre-market high and previous day's close. It went above this. So right off the bat, I knew that, at least for the short term, that we actually had a bullish potential, right? A bullish thesis going into the morning. Again, remember, each of these is 1 minute. So in this case, this is about 15 minutes in the market right now. And then we saw that consolidation and then that breakout, right? Which I did want to see it continue. Obviously, that's not how it worked out because we had a fake out. If you look on the right side now, again, this is a 5 day, 15 minute. I can go on the 5 day, 5 minute really quick just to make things a little bit more solid for you just to kind of look at it. So again, this is 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, 1, 2, 3, 4, 5. So 15 minutes in. So 3 of these candles, right? And that's when we saw that actual breakout, right? And again, we saw that breakout actually pretty nicely and pretty decently. Even then, after we had a nice little form of bull flag, we actually had a continuation. There and then would have been your day trade and your scalp opportunity. Okay. Oftentimes when you see something like this, yes, it would run maybe 5, 10, maybe even potentially 15 minutes. It doesn't usually happen like this when you have it run and then you kind of have that exhaustion and then we have a deep sell-off, right? Of course, you guys have to understand market conditions always change. You can't trade the same way every single day. However, you can have certain rules for you to trade and for you to take in and step into that trade. So for that being said, right, if everybody can trade the same way, then same exact, I guess thesis every single day, everybody would be traders. Everybody can make money the same exact way. However, this is specifically tuned for scalping and day trading, right? Break off the pre-market high, looking for buyers to kind of start to step in. When they do, and it does look like they do hold on the 1 day, 1 minute, right? We actually have this, bull flag break and then one more leg of continuation. Now, I always mention the 2 leg rules, right? And I'll go ahead and walk you through that very briefly. Going into the 15-minute, or sorry, going back into 5 minutes. So this one, it didn't really give you any kind of pullback for you to kind of enter unless it was that initial break, right? So this right here was the first leg, obviously. And you can't really see it here, but if you look at it on the left side, man, this is too crunched up. Let me see if I could. Let me move this. Going back into it. So going back into it, right, looking at it, right, we had the break. Again, utilizing the Discord tools, right? If you guys do back test this and go back into it, the second criteria of when you actually have that conviction to play the upside is when you actually have the same amount of potential SPY calls, right? Start to appear in the option flow. So that gives you another level of conviction to play that upside, okay? Again, when you guys do trade these breakouts and whatnot, the main thing and the main purpose of this, right, is the risk to reward spectrum of it. Why? Because if you're playing this breakout of, let's just say, pre-market high, like I always like to do, and you want to play that continuation to the upside, right, what you need to look for, or what you need to actually create a game plan around is that if it was your entry, and let's just say, obviously, things don't change, nothing's 100%, and let's just say this fell down to the downside, right? And you can say, yes, you're wrong now, right? The thesis was wrong, whatever. You need to find a stop loss or a place where you to just cut it, right? This gives you the prime R to R where you can just say, I will minimize or max, 5% of the trade, maybe a little bit lower from pre-market high. If let's just say the close of the candlestick does not validate and we do have a fake out, and then we just kind of dump from there. If that's the case, right, at least you know that you're capping your risk, you're capping your loss, not to have it very broad where you can lose a lot of money, right? And that's the main purpose, right? And of course, if it does run up, which obviously I'm not going to lie, every time you trade these exact same criteria setups, most of the time it does actually have a nice leg before it makes a leg higher. When that leg higher does happen, right, that's when that 2 leg rules comes in, and you say, okay, as a day trader, you know that every other stock out there, not 100% again, but most of the time when they trade, they have a maximum of 2 to 3 legs. Anytime, I just like to reuse that reference of just humans having 2 legs. When you have those 2 legs run up, the risk to reward substantially decreases, meaning that your reward isn't going to be as high as this when you first entered. it actually decreases as it moves into your favor. So a lot of times what people like to do is they can get in and out, they can scalp out completely, or they leave a runner off that first, let's just say bull flag break, and they collect from here, and then they'll collect it out completely on the second leg, or they'll have one more runner, right? You can have that one contract runner and you want to play it all out. So be it. That's just your R to R. But again, remember, when you're trading this as a day trader, your risk or your reward substantially decreases as it moves in your favor. So that's why this scalping potential strategy kind of works significantly if you know your game plan of exiting, entering, and when you want to take profits, right? Of course, again, like I said, enter here, conviction play based off option flow. Let's just say we have it break a pre-market high and option flow starts showing, some SPY calls appear. Now there's another setup where you can actually kind of ballpark it, right? When you see multiple SPY calls come in, and let's just say they push out for 474, 475, and it's actually trading at 472. Again, nothing's 100%. I'm just giving you it by experience of what I've seen it as a trader. Most of the time, these smart guys, these smart money, big monies, institutional traders, they have it all. And most of the damn time, it actually goes to the strike price that they choose that goes to 473, 474. Again, going back to the risk to reward, as a retail trader, we're not here to catch the tops and bottoms, right? Even though it does help, it does feel really great if you can catch the tops and bottoms. For us, we need to maintain our level of saneness when we collect from here and get out here before we get rug pulled, right? Boeing's a perfect example, okay? Fucking upgrades, and then after that upgrade, fucking huge sell-off, like just huge manipulation, some bullshit going on. Fuck them, but that's exactly how you want to play this as a retail trader, as a scalper, as a day trader. I'm gonna give you guys another example. I'm gonna go into Apple, since we did trade Apple. I mean, and it's the perfect example yesterday. Let me go back. So if you guys want to back test this, obviously I have multiple screens, so I can't really show you the Discord on the option flow, but if you go ahead and click Control F, right? Click Apple, go back into tomorrow's, see all that bullish flow appear in the morning. It gives you huge insight on how these tools actually help you as a scalper. Again, when you guys are trading this, right, the first criteria, like I say, is watch SPY, watch QQQ, watch your /YM, which is your Dow Jones. Depending on the stock that you trade, if I'm watching Apple, obviously it kind of correlates with SPY and QQQ. If SPY and QQQ are both blasting off above pre-market high, that gives me an indication that for the day or for the short term of the day, I want to play the upside. I don't want to play the downside. Again, you could always be wrong. However, the way I want to play is I want to play that breakout, and I want to have that my risk to be very minimal, so that if it does fall out, I can get stopped out very easily. Say I was wrong, move on to the next trade, because 9 out of 10 times when it does break out on volume and you have option flow reassuring you that there's bullish sentiment coming in from the big boys, 9 out of 10 times this thing's blasting off, okay, with or without you. And that's when you see all the FOMO start picking in. But again, this is just strictly, again, scalping and day trading, right? High potential, high probability trades where you can get in and out, right? After you get in and out, go to your 9 to 5, go make breakfast, go do whatever you got to do. And then after that, repeat that the next day, right? But again, quick example of Apple of what we traded before I jump into multiple scenarios and multiple methods of potentially not trading, right? Not taking on a trade, taking a day off, whatever it is. So Apple, obviously, again, like I said, look into the option flow. I swear the first one was at 6:32 a.m. or 6:33 a.m. Again, I'm trading on the West Coast. So that's 9:33. So like 3 markets in, right? I saw this breakout already. I'm looking at SPY on my other monitor. SPY is also breaking out of pre-market highs. I say, fuck it. This looks prime. I'm playing the upside, right? Even if it's very short term, again, I'm only here to scalp it anyways. I'm only here to get in and get out. Of course, I'll use my active trader here, right? I'll put in the contract tickers here. I'll click buy, I'll click sell, whatever it is, so that I can react a lot quicker, right? Because at the end of the day, like I said, I am scalping, okay? So break out the pre-market high. We saw some conviction. We saw some sentiment coming in with Apple being very bullish as well. Looking at it, we did also watch the 1 minute candle, and this is very important, guys. When you look at the candlesticks, you want to make sure more than half of the body is closed above any breakout zone. Okay, especially if you're looking at it from a very smaller time frame. You know, because when this is live, this is moving like this, man. You're freaking having anxiety attacks left and right. So as long as you know that, you know, it closed above more than half, very strong candle, literally at the first minute of the day, you see some option flow come in, right? You're thinking everybody else is bullish, right? There's no need for you to just play the downside. That's just like trying to be the hero, right? So you want to play the upside now. What you need to do is there's two things that people like to do. They enter right away, they FOMO, they chase. However, if you FOMO chase that early, once you see that, you're not necessarily FOMO chasing. FOMO chasing is when it runs up like another dollar for the day already. And then that's when you're like, oh shit, maybe I should just wait for the pullback. If you get in once you see both of those criterias, again, SPY breaking out and that ticker breaking out, plus you see option flow reassuring you that there's more bullishness or bearishness with whatever way you're trading at, right? You can get in right away. That's fine. Of course, you shouldn't get in all in at, you know, every any given time. You should, you know, scale into the stock, right? If you want to. So many times what I like to do, again, with the risk to reward, if I saw this break, I'll enter. Remember, I told you guys, I'm like, I have buys around 2 to 3, maybe even sometimes 4 times, depending on the type of trade. If I'm playing weeklies, for sure, it's probably capped at 2. So I'll probably get in my first scale here. If I got in here and it doesn't give me that pullback where I can buy again, what I like to do, I just let it run up and I'll scalp it. I'll get out. So literally one buy, one sell. Okay. And that's my scalp. I'm done for the day. Maybe I'll make $100. Maybe I'll make $1,000. You can't put yourself onto how much money you can make anytime because the tickers move differently every single day. You can only trade what the market gives you. Right. And of course, that's pretty much high probability trades that you can go. Right. Of course, like I said, the second method is I saw this bullishness, right? Let's just say it kind of pulls back. Pulls back to pre-market high, right? Which I do like to see that retest anytime I see a breakout, and it does start to hold, right? Consolidates a little bit, and then we kind of go higher. I will add here. I will add there, right? Even though I had a bad entry here, I will add there, right? Of course, what you need to start realizing now is that if you're adding, you're putting on more risk on your potential trade. So if you're putting on more risk, you need to have a game plan to get where you're going to get stopped out now. Okay. Now here's the great part about how I like to trade with my 3 levels. Again, the green is pre-market highs, previous day, pre-market low, and then the white is my previous day's close. Is I can use these setups, I can use these levels as potential buy zones, add zones, or stop losses. Okay. Sometimes I'll have the previous day's close, or not I'll have, but the previous day's close is either set right below the pre-market high, right, which I can use that as a potential stop, or right below it, of course, if you don't want market makers to kind of, you know, stop you out. But these are good levels to have every single day because you necessarily, as a short-term day trader, can look at the chart and say, okay, hit this level, I should get out, end of story. Rather than if you don't have these levels set up and you don't understand the purpose of what it is, you know, you might not realize where you're gonna, you know, say enough is enough. Okay. But of course, if I were to buy here and it continued to consolidate and then start blasting off, obviously my reward potential is much greater because I am actually positioned a little bit more heavier than the first time I bought in. But of course, you know, that's a clear indication of how you want to see these potential trades. Again, I don't want you guys to jump into this strategy right away. Look at it from day to day, from time to time, back test it. When you see a bunch of option flow come into the Discord, right? And then just look at the ticker when it does happen. Type the ticker here and just monitor it, right? And then you'll notice sometimes when it just kind of starts to run, you have a little slight pullback, a shakeout, and then we start kind of rallying in that direction, right? And vice versa when it plays a downside. Obviously, like Boeing here, I can go in Boeing really quick just to show you an example on the opposite side, right? Let me go here. again, continuation plays, right? Like I like whether or not you're playing the breakout or the breakdown, honestly, it works the same way. Obviously, Boeing opened below previous day's close, right? And below pre-market highs. So what I'm actually looking for, obviously, and you can ignore this. Well, technically, you don't have to ignore it. I can give it to you. So again, top-down analysis, charting on a larger time frame chart is critical. Why? If I didn't do what my due diligence and charting on a larger time frame, I wouldn't know that this trend line, which is my purple dotted one, and it's actually shown on my larger time frame, would have been a key trend line for it to either make or break. And of course, that $222.91 was a strong price level for where buyers or sellers were holding, meaning it was a good support / resistance level. Okay, you can see the pre-market low literally 3 cents away from both of those levels. Okay, which is why again I preach top-down analysis. I preach doing your due diligence on like on a yearly chart prior to you trading on a smaller time frame. But what that just shows you is that there is huge interest around these levels, and if we break below that interest, you can tell that, hey, this thing is going to fall, this thing's going to dump, right? If we bounce, right, and we see significant bounce, maybe volume picks up or whatnot, then it might actually hold, right? But for Boeing, it didn't. Okay, sorry, I don't want to stray too far, but I mean, going back into it, right, like I said, the same breakdown method of how you want to trade, right? If SPY is dumping, if QQQ is dumping, for Boeing, I'll probably look at Dow Jones and whatnot. If it looks like all of these retail sectors and whatnot, everything is, consumer staples, everything is kind of dying down. I want to play the downside, right? It's same as a breakout. When something breaks out, retests, and it continues up, that's a continuation. Same with the downside. If it breaks down, retest, right? When support turns resistance, and then it makes lower lows, that's that other leg down, right? So same thing with Boeing, or same thing for this particular day trading strategy. For this one, I'm not sure if there were any Boeing puts in the option flow when it did break through. However, again, if you're just looking at how to trade, how to scalp, this is another method for you to look at key levels, breakdown, breakthrough. You can see this little retest on the 1 day, 1 minute, and then we have another leg down, right? Obviously, break, retest, right? Didn't go to the T, but you saw a consolidation, and then we say huge leg down lower. Oops. Huge leg down lower. And of course, obviously, after the second leg, that's when you should start seeing some exhaustion. And when I mentioned the humans have 2 leg, whatever resemblance and whatnot, I only say that because most of the time, there's only usually 2 legs down as a day trader. It's rare. It does happen. Okay. So don't quote me when it does happen, but there are instances where, God, my mouse is doing crazy shit. But first leg down, consolidation, second leg down, sometimes consolidation or even a little dead cat bounce, and then we have a third leg for the day. But that third leg, again, we're probability traders, right? We're not wishful thinking, we're not praying and fucking doing shit like that. That third leg is very low probability of it ever happening, right? I mean, the only time I can see it happening is if SPY or QQQ or Dow Jones or whatever actually sells off throughout the whole day too, right? When sentiment is super bearish or super bullish. And you guys see that from time to time, like when SPY dropped 100 points in 1 day or something like that. Those are the only indications of where you would not see that third leg. So from a risk to reward standpoint of how you day trade, when you see these 2 legs, 1, 2, okay, is you can scalp on that second leg to the upside, right? Finding a exit point and whatnot when you scalp this to the upside when you're playing the reversal, right? Because now that obviously you don't want to chase the downside because there was a huge move, like I told you, 2 legs down already. So for you to play puts here is actually kind of dumb, right? Because you already missed out on so much. I'm sorry, it's not dumb. In a way, it's you're chasing the downside. You're thinking that the market is just going to continue to dump, right, off of this. Whereas how you should look at it from a trader's perspective or a day trader's perspective is we already had this was a 2, well, technically opened at 215 or whatnot, and it went down to 209, right? You can look at the average daily movement of what the stock ticker moves per day, right? $6 for Boeing to go up and down is enough. It's the average. So for you to think that today is a day where it's going to drop another 6 points or 7 points is kind of illogical, right? So for you to play the upside from this down keep now from the second leg is much more smarter. That makes sense. Now, again, this is a day trading strategy, a scalping strategy. We're on the 5-day, 5-minute right now. So from you to enter from this second leg down, and again, you don't have to time the bottom. Like there's a reason why I tell everybody, look, I never enter once and I never just exit, because for you to statistically continue to nail the tops, nail the bottoms, nail your entry, it's impossible, right? Give yourself some leeway to expect these type of moves, right? So again, for this example, you have 2 legs down. You want to play the upside now because you're like, hey, shit, that's enough for Boeing, man. Like, I'm looking at SPY, let's just say they're kind of consolidating too. They're not really moving. And I'm thinking, look, if Boeing just really dumps here, at least from a risk to reward standpoint, again, like a trader, right? You can put it as the low of day as your stop loss, below the low of day. Sorry. So when you enter here, or let's just say you don't enter the lower day, you enter here, but you give yourself like a 2-3% kind of wiggle room, right? For you to have that stop loss to say, okay, enough is enough. It might actually dump. That is how you should trade it, because now you're risking only, let's say 5%, 10% for a reward of 20+%. Or honestly, in hindsight, we're looking at it, it didn't move that much, but theoretically, if you're looking at it from a risk or reward standpoint, your risk is here and your reward potential is all the way up there, right? Sorry, that's a mouthful, but yeah, that's how you should trade it. That's how you should scalp it too. If it was a breakdown from the pre-market lows or the pre-market highs for potential continuation patterns. Again, when you utilize the tools in the Discord, those, honestly, I know a lot of people follow blindly, and honestly, if you're gonna follow blindly, yeah, you should follow that shit blindly. But I mean, you never want to follow anything blindly. So I always kind of suggest have a strategy, have a criteria. So for me, again, I'm a breakdown trader or whatnot. I like to scalp it. If I'm scalping it, I can't fucking like alert that shit. Like I'm already in. I might even get out in like 15 seconds or like 30 seconds, right? So for you to trade like that, you can actually trade on your own, find those key breakout or breakdown patterns. Again, back test it first before you dive into it. These are perfect and prime examples. And you can look at it from any other stock ticker too. These doesn't have to be large cap stocks. You'll notice when you have a huge flush off of what it trades in pre-market, and most of the time you have at least a leg of continuation, right? So that's why this is a day trading scalping strategy. But yeah, most of the times when you guys are trading this, right, you have to think of it from a risk to reward standpoint. I feel like a broken record, just playing over and over again, but that's the thing that you need to reiterate. And if you can rinse and repeat that day in, day out, I mean, you can make a solid living trading. I mean, you can make a solid, side income just doing this, paying for groceries or whatever it is, right? But of course, that's not going to be every single day, which is my main purpose, right? So now I'm going back into SPY of today's action. Okay. So today is a good example of it not being what we would like. Okay. If anything, today was one of the worst days because we had a fake out. After that fake out, we literally just consolidated and went choppy all day, all morning. Okay. So looking at it, we're in SPY now. Okay. Let's just say you trade that same strategy from up here. I'm not sure if we saw SPY. I didn't trade it this morning. But we went up here and you bought in, right? What you could have done is you had that first leg. Like I said, guys, first leg, pull back, bull flag, second leg, whatever you want to call it. This is the second leg. So from here on out, if you caught that breakout, the pre-market high, again, I'm not sure if there was any flow that came in. I would assume not, since we didn't have a huge, nice continuation. But from just a scalping perspective, right? 1 minute, 2 minute, 3 minute, maybe even 4 minutes. Man, you guys are options traders. You guys know how much that can make you. And from this little move, this is what, from 468.75 from like $1 move, pretty much $1.50. Man, that can make you a couple $100 easily, right? Off of what, 5 contracts or whatnot. And you could have been like, hey, I'm done for the day. Rinse and repeat. Move on to the next day. right? Again, you're not going to have the same market conditions every single day, right? But if you can just stick to this one scalping day trading strategy, been doing this day in, day out, you will oftentimes hit those home runs, those grand slams. And even if you don't, like Apple, we caught it yesterday. We exited early. I even had FOMO, man. Like there's people who didn't caught it, who didn't catch it, and they have FOMO. And there's people that actually caught it and they got greedy. And I'm just sitting here just missing out on another dollar plus contract from when I sold. But of course, you can't complain with the gains that you get, right? Your intent was a day trade, was a scalp it, which I did. So from that being said, you should be happy from that potential trade because you did profit, right? So again, move on, rinse and repeat the next day, and just so forth, right? So one example actually too, I wanted to bring up to you guys is when is it a time for you not to trade? Let's just say, right? Obviously today's a very bad example because this is a huge fake out. So from here, all the bulls were probably like, oh fuck yeah, I'm getting in this shit. And then from here, it's like, oh shit, I should probably get out. Which I hope, if you're trading the strategy from this, oh, actually, this is a perfect example. Like I told you guys, previous days closed right under the pre-market high, and that was today's. Okay. If you got in here and let's just say you didn't collect profits, you thought that we're going to have a continuation. You went up again. You're like, oh shit, this is going fucking high and you didn't collect profits. Then obviously you have this massive dump. Now your premiums are getting chomped. And now we're back here and you did not exit, right? This should have been that indicator for you to say, if it does break below, let's just say pre-market high or previous day's close. On this case, on this particular case, I would have used the previous day's close, just because it's very nearby, and I don't want market makers to stop me out right away. I would use a little bit below previous day's close. If it does hit that point and you get stopped out, you need to tell yourself, I will get the fuck out of this trade. Like that is it, right? Because it already hit. And if you don't, and you're just wishful thinking throughout the day, look what happens throughout the day. Okay. Now you're going to be eating this shit and you're going to be down even more. Okay. So again, that day trading scalping strategy, right? Ideally you enter here, you should have exited anywhere here already. Again, it's a scalper day trading. You're in for a couple minutes, couple seconds, whatever it is, right? If you're being greedy and you're holding and wishful thinking and whatnot, especially after that, if it stops making higher highs, right, off this trend line, then you really need to, have some discipline, be like, okay, breaks below here, let me get the fuck out. Okay. And call it a day. Now, there are often times, I'm gonna give you an example where if you look on the right side now, you get stopped out here, right? Because again, below previous day's close, our white line, everything is synchronized, so it's all the same. And then you have this you get stopped out first, and then it starts to reverse on you and it goes up. You will have days like that too, but you need to tell yourself as a trader, look, this was my game plan from the get-go. I need to follow it. I need to stay disciplined. This could have been that 1 out of 10 times of it reversing on you if you continue to trade that same way. And you can't, hurt yourself or put yourself down because it reversed on you and be like, oh shit, I should have held. Because that's what's going to snowball into a bad mentality for the next time. And for the next time, if it doesn't reverse on you and this shit happens, right? This is where people start losing their shit, and then they start sizing heavy because they don't know what the fuck to do. And then they start getting, kind of, what's that word? Revenge trading, right? They start sizing up because, oh, I just lost $100 when I was up $200. So let me try to make that $200 back. So, that's going to mentally kind of drain you and just put you down. If you just stick to a scalping strategy and you go, okay, boom, boom, in, out, whatever, SPY is looking good, option flow is looking good, the tools and the Discord show me that there's a continuation here, fuck it, I'm gonna shoot my shot. From that being said, and from that moment on, you need to tell yourself, okay, this is where I'm gonna exit, this is where I'm gonna take profit, something like that, where you actually have an idea of how you can trade this. Okay. And again, that's why you notice when I used to do it, right? It helped at times, but for me, I don't ever get too close to my price targets. What I like to see is huge moves to the upside, right? And then I don't care where it starts consolidating. I don't care where the flag starts to form. I don't care, if it's like a little, inch or whatnot, or it's like, a big freaking flagpole. Wherever that starts to set, and where I start seeing some level of exhaustion, like let's just say if volume starts to die, right? Which is a perfect example right here. If you line it up, volume is dead. We're seeing lower volume and we're creeping higher. That's a signal for just to get out. Simple as that. Like, and if it does, you get faked out and it goes higher and even higher. Like, I mean, it is what it is. You're shooting your shot based off what you see in the market. And that's just it. So if you guys, I don't know, there's a lot to kind of go over. Again, this is recorded too if you guys want to go over this video and back test it too. Look at, option flow, look at the Discord tools, look at everything that you can actually look at, right? And notice this. And one more thing too, again, like I mentioned, there's so many ways to make money, there's so many ways to trade. For me personally, I just like the breakouts. There's people that, what they like to see is first, like I mentioned before, they like to see rejection at pre-market highs or whatnot, and then they want to see it fall. One fat candle here, one tampon red candle. They'll probably take this to the downside, collect profits at maybe the day's low, which is right here. Or if they're really, trying to stretch this out, pre-market low is a good price target too as well if it does fall down. And there's also some other traders where they just wait. They don't even enter the first whatever, 5 minutes, 10 minutes, right? They'll wait. They see if it bounces here or bounces there, or it breaks out here or breaks down here or whatever. They like to be a little bit more conservative, right? For me, I'm literally trading the first hour and a half of the day because after that, volume dries out. You're not going to have that same volatility. And if you're trading weeklies, you're trading options, you guys see it day in, day out, like fucking like it could move the same like candle from here in the middle of the day, but your premium isn't going to jump that much. It's going to jump maybe like top like 15, 5, 10 cents, whatever. Rather than when you're entering, kind of early in the day and it jumps like, holy shit, like, 50 cents, that for me, it's just like, okay, I'm in and out anyways. I'm going to capture my shit, be done for the day, make my money, and then rinse and repeat, right? If it doesn't happen the next day, the day after that, I'll wait until that setup happens again for me. And one more thing, what did I want to say? When I guess not to trade, I think, or did I not go over that? Let's see, like Nvidia or something. Okay, perfect example. Again, many ways to make money and trade. I'm not a range trader, so I wouldn't trade this. If you're a range trader, this is the setup for you to trade. Literally sell off. You have that nice bounce, big fucking green candle. You're like, oh, fuck it. This thing going back to previous day's close. All right, I'll take the trade here. I'll exit there. Or if you want to stretch it out, take it out there. That's not my style of trading, so I don't do it. What I like to do is when I see it reject from pre-market low and it rejects from technically pre-market high, right? And it kind of just trades in this range, I'm hands off. I'm probably over it, especially if like a more than hour of the day already happened. So at this point where it started starting to break out was what, 5, 10, 15, 20, 30 minutes in, volume's already starting to dry. Look at this shit, right? Even that fake out volume is not even that much. 30 minutes in, volume's kind of drying out. If you're looking at SPY, looking at QQQ, like I always mention, that is actually selling off. So for any stock ticker to trade, inversely of the S&P 500, the QQQs, is very rare, and it's literally just probability, guys. If the broader market's selling off and your one stock ticker is trying to run, the odds of it running is very slim. Okay, so of course, this is something where you don't want to go, you don't want to enter. And again, my first and foremost of all the criteria of what I ever look at before I enter a trade is I look at what SPY is doing. I look if it's breaking out, or if it looks like we have a continuation run breaking above pre-market highs, even above previous day's close or something like that too, which is a key level, like when you have like a red to green day or whatnot. Those are the levels I like to look at when I day trade, right? And if I trade a stock that follows it, I'm for sure going to look at it before I enter a trade in any direction. But yeah, do you guys have any questions? There's a lot, but if you just look at it, this strategy is very simple, man. Like everybody, I know Derek said he was tilted or whatever, but yeah, it's very simple. All right, that's why look, if you look at my charts, I have no fucking indicators. Like literally, I'm just trading off of price action. I don't fucking have fucking SMAs and shit. I just look at this shit. Fucking bounce from here. Fuck it, I'm in. Risk to reward standpoint, right? That's how I trade. If I see this huge candlestick, right, and it's almost like like it's just gonna continue higher anyways. I'll fucking shoot my shot. I'll enter, and at the break below low of day, I'll exit. Simple as that, right? I don't need lines to cross over or whatnot. It kind of just tells me, right? And that's just how I trade, right? There's many different styles out there, but I like to keep my charts very clean. Looking at this shit and then just having some conviction using the option flow tools, like literally that's all you need. You can make one trade per month, one trade per year, whatever it is, and fucking make a financial difference. Okay, wait for those potential setups. And then when it does, put your big boy pants on and then fucking send it. As simple as that. So let me go through some questions. No questions, but holy shit, that's sick. It is fucking sick, man. Like something so simple, right? And it's all you really need. It's all you really need to do. I'm on the 15-minute right now on SPY, scrolling through. Okay, haha, nice. Leg one, base leg, love it. After two legs, you can enter opposite direction, and 9 out of 10 with maybe two buy-ins, you will win. Yes. Again, it's all probability. You play the reversal, you play the inside, and when you do enter, you have to monitor the broader markets. Okay. If broader markets start to make lower lows throughout the day of when you entered, and your stock or that ticker that you're trading has not, it's a good sign for you to get out, because that's your freebie of getting out before it makes lower lows. However, if it does start to consolidate and you see SPY start to reverse before your stock, you might luck out and you have another opportunity to actually add into that position playing that reversal. But regardless, I always like to play the two legs down, especially when it happens very late or very early. If it kind of just wiggles around and it starts to like reverse, let's say 9:30 my time, which is like lunchtime in the Eastern Standard Time, which is 12:30. I actually don't want to play it, because most of the time what you're gonna have is you're gonna have it do this one leg, or let me make it what's gonna happen is you're gonna have one leg down, right? A little bounce, another leg down, and then you're gonna suspect that you want to play the reversal. But what's usually gonna happen during zombie hours is it's gonna bounce though, right? If you don't scalp it, it's gonna bounce. And it's gonna do this, and now you're wasting your whole fucking day before maybe power hour it starts doing this, right? Or if it doesn't, it just fucking makes lower lows. But regardless, this huge mental capacity, fucking drainage, like fuck that shit. If it happens quick, I'll play it. I'll scalp it to the upside. If it happens along and it gets to like the middle of the day, I say, fuck it, it's not worth my time. Better things to do elsewhere. Read, look at other tickers. I don't know. But anyways, next, gonna watch this a few times. Solid stuff. Is there a reason why you don't just trade SPY alone, since everything seems to follow it? I do trade SPY. I trade like ES from time to time, but sometimes it's more fun when you have the continuation for certain tickers, because like I said, I'm a breakout continuation guy. So if there's news to it, man, that shit's gonna run. That shit's gonna pay. Rather than if it's SPY, you're literally trading 500, the companies, and it's not going to get too crazy at times. But of course, as a trader, you can trade any way you want, anything you want. And I'm just one person. Like if I'm looking at this, I'm looking at that, and things are going wild. I'll probably look at, first, obviously my watch list, which if I share, my other screen, my other monitor, this is what I see in my watch list. So here's my SPY, top left, never remove it. My QQQ in the middle, my /YM, which is the Dow Jones. I never remove these three. I keep that there fucking day in, day out, and never ever touch it. I leave it all in the 15-minute candles, right? Just because, I don't really need to see on the 1 day, 1 minute. It's more of just eyeing what the day's action is going to be for me, or for the, the ticker, the market, whatever it is. Very easy to tell. I my eyes are trained to it. I keep my watch list tickers: Apple, Lucid, QS, GGPI, Nvidia, BA, and whatever it is, right? Usually I keep my Apple here, I keep my Boeing here, and I keep my Facebook here. These are just like the 6 stocks that I just choose. Sometimes I go in and out. I'll look at whatever it's trading at. If someone on in the Discord says, "Oh fuck," Nvidia is popping off, type it in one of these boxes. Just check it out, just a look. But yeah, this is pretty much my watch list charts of what I look at on one of my monitors. But again, the key thing is this big box right here, the SPYs, the QQQs, and the /YMs. I look at that shit like a hawk. But yeah, hey, would you consider day trading a stock that has entered the day green to red? Oftentimes I do. If it happens throughout when the market is live, because that gives me a huge bullish signal, right? Like, so I'm already on Nvidia just to show you. So I guess like market was live, literally went from red to green. Oh shit, here, right? Oh fuck, what the hell? Oh, it's because I'm not. Sorry. Okay, there you go. But yeah, Nvidia is a perfect example. All right. The previous day's close, which is my white line. Okay, technically opened here, bounced here. All right, you could have scalped this because it went red to green, right? I guess in a way. And then just get in and out. That's a strategy too. Of course, when you're looking at this in real time, there's so many things going on. If you can catch it and you catch that one particular trade, that's honestly sometimes all you need to do, right? And then move on to the next day or move on to the next potential trade that you can potentially catch. But that's really all you need to do. Dude, so simple. Been trading for years. Feel like an idiot for missing this. LOL. Dude, man, don't be so hard on yourself, man. I went through the whole fucking batch of like having so many lines on my charts, finding what was good. Actually, I like Bollinger Bands too when I'm using this sometimes, but now it's just kind of for me. I just trade from a risk to reward standpoint. If I get in here and it doesn't reach here and it reaches here before it reaches, sorry. If I get in here and it doesn't reach here before it reaches here, I'm gonna get out. You know what I mean? And if you look at it, right, it's like a 3-to-1, right? 3-to-1 risk to reward or whatnot, call it a day. If it does get here, the hardest thing is mentally preparing yourself, because if it does get here and it doesn't get here from when you entered, you're going to be down, like, let's just say $100, and you're just like, fuck, man, I'm down $100. And the hardest thing is the discipline, man, to tell yourself, okay, either you're going to take one more trade and try and get that, not try and get the money back, but trying to make another good trade, or you're going to tell yourself, I'm going to make one more trade, whether I win or whether I lose, I'm going to be fucking done for the day. That's what's going to prolong you as a trader and literally reach you to the next level and next tier. Oftentimes you'll see me, I rarely trade more than 3 times a day. If I do scalp, I do day trade, only because, when I play basketball, it's fucking 3 and out, man. It's like, okay, I have 3 tries per day. If I fucking make money the first try, good. If I want to try again, I see another setup, I'll make that same trade. If I see another setup and then I like the trade too, I'll make it. If I have 3 green trades, no matter if it's fucking $1 or $1,000, I'm gonna be done for the day. Okay. If I have my first trade is green, my second trade is red. Let's say I'm break even. Oftentimes I'll give myself one more trade to try and break and miss. Right. If I miss, fuck it, I'm done. I'm down for the day. Whatever. I'm done. Right. And then that's just how I like to trade. There's a set of rules that you guys should start writing down, preparing for yourself on how you like to trade. For my particular strategy, like I told you guys, trading the first hour and a half of the day, 3 trades is definitely more than enough before you're fucking fatigued and you're ready to go to fucking bed. Like, or like it's just swamped. Your whole brain is freaking dried and fried, and you're just like, what the hell do I do? Yeah, like I said, way more than enough. Sometimes I just take one trade. I'm just like, okay, I just made, I don't know, $800 or something, right? Something very median, and I just be like, okay, I made $800. Okay, let's be a little humble, right? Because there's other people out there fucking working 40 hours a week, and they probably don't even make $800, and I just made that shit in like 5 minutes. So I'll just be like, okay, fuck it, I'm out, because I don't see another setup, I don't see another potential trade for me. Even if I did, Confidence is everything when you guys are trading. So if I don't see that, and I don't feel confident even after I took on that trade, or let's just say that trade actually didn't go in my favor, but I lucked out and it went in my favor afterwards, right? Something like that when the market does, help you from time to time. That could be, an example of you to just say, okay, hey, I lucked out on this one. Maybe it's time for me to just step back, look at the charts. That doesn't mean to turn it off right away. You still need to learn. You still need to adjust and see what the probabilities are, right? You want to test and look at and review the trades. So you can just kind of not take on a trade and just look at it, right? Okay, you see the next stock ticker, it goes here, and just like, okay, I think it's gonna go here. And if it does go there, it's like, okay, hey, your thesis was correct. Even though you didn't take on the trade, at least you're learning, you're back testing, you're experiencing it, right? But yeah. Next question. I missed the first 10 to 15 minutes. Did you explain how to read and just play the option flows? So option flow, right? If you go on the Discord here, let me just share it really quick. So all of this is in real time, right? Again, if you're looking at this from the beginning of the day, I'm not going to scroll back all the way up, but if you look at it from the beginning of the day, it's all real time. You just look at it. There are type of ways of how people like to trade. I've heard many different stories and alternatives. What they do is, let's just say they say, for example, right, this is not in real time, right? They see ARKK at 6:31. They see some puts. They're looking at the expiration 12:31, and not that aggressive, right? But they do expect that ARKK is going to go down. What they do is, if you're trading on a computer or whatnot, you're trading on multiple monitors or your phone, they immediately type in the ticker into the Discord. Not in the Discord, into the your trading platform, whatever it is. So I have it all synced. So if I type in RAKK, you'll notice that both of my charts, if you can't see my other monitors, but my option chain, everything fucking goes to ARKK right away. So let's just say this was at 6:31 a.m. And then we start seeing some bearishness, blah blah blah. A lot of people time they'd like to get into it, copy and paste their options contract, trade the downside if they want to really chase it. Again, I don't recommend chasing things, following it blindly and whatnot. However, if there is a way, or if there is anything that you should follow blindly, it should be that, in my opinion. We've seen it day in, day out, where fucking someone puts in like a 500K order before earnings and it fucking pops out. Or we see like like that PFE play, someone bought like 300K, and then overnight there was some news about it having a pill. But just like that, simple ways when you like to trade. It's nothing's certain, but that's one method. Another method, if you don't trade options, what people do is they look at certain tickers, right, and they see if, like, let's say ARKK 12:31 100 strike. It's trading at, let's just say, like, what is that trading at? I don't know, 106. Yeah, 106. So it's like, okay, so big money is starting to think that there is still some downside left. I want to swing it, right? And this was end of day, right, at 12:59 p.m. or 3:59 p.m. And then, or some people that don't trade options, like I said, is just they're short the actual equity, the stock, right? Again, you don't have to short either. If you see like something you like, a lot of Apple's still flow going up, you can buy equity. You don't have to trade the actual options. Obviously, your gains and your losses aren't going to be as pretty, but it's a way for you to kind of play with it, with you can de-risk strategy. But yeah, other than that, like looking at it in real time when you're trading it, like the first 10 to 15 minutes, especially when it starts to break out, like I said, pre-market highs, or break down pre-market lows, and you have conviction, you have edge going in that same direction from the option flow, man, 9 out of 10 times, man, I'll fucking take that trade on. I'll take it on any day. Been dropping the scalp game. I see how consistently it works on the 15-minute, looking at each day individually. Is there a way to apply the leg strategy to a larger time frame, like 4 hours? So this is, the legs actually only works, well, not only works, it actually works in larger time frame, but it's more accurate as a day trader, just because if you're looking at a larger time frame, news and the ripple effect of, let's just say, earnings or some particular news where big money investors CEOs and whatnot. They're all everyone's invested, but they don't follow the stock market like we do. So there's always that ripple effect when you're looking at a larger time frame where you can't really time it. Yes, if you look at it from like a consolidation, period, if you're looking at it, like, if things start to just consolidate, like obviously there's ARKK, first leg down, consolidation. All right, let me make it a little bit more clean. I'm gonna remove my Bollinger Bands. All right, you can see a top consolidation, breakdown, potential first leg, consolidation, second leg. So again, from a larger time frame, it does actually work too. However, it's harder to time because, like I said, the ripple effect of people understanding and people, funneling their money or funneling out their money is a little bit harder to kind of, I guess, pinpoint because you're gonna have to wait until you see consolidation again. Okay, so you're gonna, meaning after the first leg, right? You can't just get in here. You can't just get in there either. You have to wait for a few days or whatnot for it to consolidate to kind of, okay, potentially you have a trade setup going in, right? And there's a lot of factors, again, like I said, when you work behind the scenes on the top-down time frame analysis, right? And looking at it, you can, draw your support and resistance levels and base it off of that. But again, like I said, it's more accurate if you're day trading, because when you're day trading, most of the time the news doesn't funnel in until someone can see it after hours. So that's why the 2-leg rules, when you see it, it's usually the most of the time 2 legs is the max you're going to see. Sometimes 3, very rare you see 4. But that's pretty much it. What's the best way to spot a swing trade? Getting better at spotting swings and plays. Man, for swing plays, for me, dude, I'm gonna be very honest with you. I'm not the best swing trader out there. Like, I'll be very clear and honest about that. But what I do like to see and what I like to look, honestly, is just very clear, like, indication of when I just draw a straight line. When I see hitting the bottom of the trend line, which I don't think I have a good example or whatnot. Yeah, nothing. But I mean, usually what I do is I draw 2 lines, man, touches the bottom. The same way I'll day trade. So pretty much here. Let me see, like, so Boeing, obviously, right? Yeah, we're in Boeing. Obviously, this broke down. It should have been my stop loss. But man, when I'm swing trading, man, if I see this on the trend line and I see this kind of bounce here, I'll fucking take my shot to the upside. If it breaks below, fuck it, I'm out. Like, yeah, I'm not the best swing trader. I do have a couple strategies I can go over. It's probably gonna take like another hour or so, but I'll do that in the next webinar. But like I said, keep my fucking swing strategies, with fucking a grain of salt, because fucking suck at that shit. Oftentimes, if anything, I'm a short-term swing trader, which I'll swing trade like a day or 2, maybe 3 days at tops, and then I'll collect profits. But yeah. How do we set up the TOS to pull up just what you had mentioned? You type in a ticker. So Daniel, if you go in the TOS and you see right next to the tickers, this is actually very good info that everybody should kind of do if you guys trade on TOS. Is you see this right here, right next to the ticker, not under the arrow, but the green little thing, it shows links. Create your links that it's all in the same color. So obviously both of my charts are on number 9. And if I share with you, yeah, so you can see this is number 9 too. This is number 9, right? So if I type in, well, you saw my other screen, right? So if I type in like Apple, whatever, right? See, my news for Apple changes, my option chain for Apple changes. And obviously you can't see it now, but all my charts change to Apple too. The ones that I set to the same link. So yeah, so let's see, it's both on Apple right now. It's literally right next to the fucking the ticker where you type in the stock. So obviously mine's set at number 9, but if you're on default, what it'll show is literally just unlink. So it's like a paper clip, I think. I don't even know. Is that a paper clip? But yeah, from that paperclip, link everything to the same number of what you want. And then if you ever type anything, the whole chart, the whole everything will change simultaneously. All right, guys. Yeah, that was a mouthful, but that was a lot of good information on a scalping and day trading strategy. Um, Again, utilize this with the Discord tools. Wait for those potential setups, and that's all you got to do. Trade the first hour of the day. Get in, get out. Stop looking at charts. I hope that helped though, guys. Again, if you have any questions too, just DM me. I'm more than happy to kind of walk you through it a little bit more if I have the time. But I hope you guys got something out of this webinar. If not, I'll see you guys tomorrow. Thank you, guys. Banger.